Welcome to the deep dive. Today we're digging into something pretty topical, actually. There's this article on fingerlakes1.com just out called Why Bitcoin Has Become a Better Investment Than Gold.
Hmm, quite a claim.
Yeah, a really bold statement, right? So we're going to unpack that. We've got the article, obviously, but also some interesting stuff from a related Reddit thread that went viral, plus financial data and, what the big players, the institutions are actually doing.
Okay, sounds like a good mix of sources.
Exactly. So the mission really is to sift through all this and figure out, what are the main arguments? Is Bitcoin really overtaking gold as the go-to safe haven, especially with all the economic uncertainty swirling around?
Makes sense. Where do we start?
Well, let's kick off with something fundamental to the whole argument: scarcity.
Ah, yes, scarcity. Absolutely central here. The article really hammers home Bitcoin's fixed supply, that hard cap of 21 million coins.
Right.
And it's not just a random number. It's baked right into the code. And then you have the halvings, these events that cut the rate of new Bitcoin creation over time. So it's like a mathematically guaranteed scarcity, which is, well, pretty unique for an asset.
Yeah, exactly. And that's where the contrast with gold is so stark, isn't it? The article points out gold mining adds, about 1.5 to 2% to the supply each year?
Roughly that, yeah.
And crucially, there's no absolute upper limit known. We could find more. So Bitcoin's finite nature is like a core difference.
It really is. And someone on that Reddit thread, Hardfork42, put it quite well. Bitcoin is the first asset where scarcity is mathematically guaranteed.
Hmm.
And that's not just a technical point, it sort of reframes how you think about a store of value. With gold, there's always that theoretical possibility of a huge new discovery affecting its value. Bitcoin, by design, that can't happen.
Right, it's fixed.
Yeah.
Which could mean, over the long term, its value is driven purely by demand against that unchanging supply.
Potentially, yeah. That's the core idea.
Okay, so you've got this mathematical scarcity. What about actually using it or moving it? Portability is another big theme in the article.
Oh, definitely. And this is where some of those Reddit comments really hit home. Like, you digital nomad BTC said, good luck crossing a border with $500 in gold.
Yeah, I saw that.
Bitcoin. You just memorize 12 words. I mean, that really spells out the difference in practicality, doesn't it?
Totally. And then there was that other story, a global stacker. I moved to Argentina and brought my net worth with me on a USB stick.
Right. Imagine trying to do that with gold bars. The logistics, the security, forget about it.
It's almost incomparable.
It really is. And for people living internationally or maybe in places with less stable political situations or strict capital controls, that ability to just move value easily and without permission, well, that's a massive advantage.
A kind of financial freedom that physical assets just don't offer in the same way.
Exactly. It's tapping into a real need in today's world.
Okay, so scarcity, portability. What about who's actually buying this stuff? The article mentions growing institutional backing. That feels significant.
Oh, it's huge. The piece highlights BlackRock's Bitcoin ETF, the IBIT one. Apparently, it now has more assets under management, more money in it than their gold fund, which has been around for like 20 years.
Yeah, okay. That's not insignificant.
Not at all. It shows a real shift in how these big, established financial institutions are viewing Bitcoin. They're allocating serious capital now.
And there was that Reddit analogy.
The foghorn one. Yeah, UTFEC 2025. When BlackRock and Fidelity start buying sats instead of bars, that's not just a signal, it's a foghorn.
Sats instead of bars. Love that. And for anyone listening, sats are just tiny fractions of a Bitcoin.
Right. But the point is, when these giants move in, it adds this layer of legitimacy,
Yeah.
It makes other investors, big and small, think, okay, maybe there's something really here.
It normalizes it in a way.
Exactly.
Yeah.
Which, of course, leads to questions about what that does to the price, long-term, market stability, all that stuff.
The $1 million or maybe $95,000 question, right? Speaking of price, the article obviously touches on performance.
Yeah, and the recent numbers are pretty striking when you put them side by side.
So what did it say? Year-to-date 2025.
Bitcoin was up over 35%, hitting that new all-time high, over $95,000. Gold also did well, hit its own record around $3,500, but its gain was about 8%.
Okay, 35% versus 8%. That's quite a gap.
It is, and that Reddit user, Yuzatoshi Stacker, summed it up really concisely. Gold protects, Bitcoin accelerates.
I like that. Captures the traditional view versus the potential,
Oh,
right?
Precisely. Gold is seen as the safe haven, the inflation hedge, about preserving wealth. Bitcoin, well, it comes with more risk, clearly, but it's shown this potential for much, much higher growth.
Which brings us neatly to the counterpoint, big caveat, volatility. The article doesn't shy away from that.
No, it definitely addresses it. This is the main argument you hear from, as the article puts it, gold bugs and cautious investors.
Yeah, people who prioritize stability.
Exactly. Gold's got this incredibly long track record, thousands of years, of being relatively stable, especially compared to Bitcoin's wild swings. The article quotes U Golden Standard saying something like, "Bitcoin is still too volatile for my retirement portfolio. Gold has 5,000 years of history."
And that's a fair point for many people, surely.
Absolutely. And another perspective from a balanced stacker was more about not putting all your eggs in one basket. They said, I'm not saying don't own BTC. I'm saying don't abandon gold entirely.
So more of a diversification argument.
Yeah, acknowledging that maybe both have a role depending on your goals and how much risk you're comfortable with. Bitcoin's volatility means it's just not suitable for everyone, especially if preserving capital is the absolute top priority. That long history of gold provides a kind of psychological comfort, too.
Makes sense. Okay, another angle explored was custody, the whole idea of actually holding your asset.
Right, self-sovereignty. This is a big deal in the Bitcoin world. The idea that you can hold your own private keys and have complete control over your funds, no bank, no middleman needed.
Like that user sovereign stack put it. Bitcoin is freedom. I don't need a vault, a broker, or a bank.
Exactly. It appeals to people who are maybe skeptical of the traditional financial system or just value that direct control.
Which contrasts sharply with gold, doesn't it? You either need a secure place to physically store it, which isn't easy or cheap for large amounts, or you pay someone else, a custodian, to hold it for you.
Precisely. With gold ETFs, for instance, you own a claim, but not the physical bars directly in most cases. With Bitcoin, you can hold the actual asset yourself. That direct ownership is a key differentiator for some.
Okay, so pulling all these threads together. Scarcity, portability, institutional buy-in, performance, volatility, custody. What was the article's bottom line? Did they pick a winner?
They lean pretty heavily towards Bitcoin, yeah. The conclusion was basically that its advantages in, well, all those areas, portability, the guaranteed scarcity, easier access, plus the growing trust shown by institutions make it look like the superior asset for today's world.
Right, and they finished with that punchy Reddit quote.
They did. From a Ewing Sacker, gold was for the 20th century. Bitcoin is for the 21st.
Wow, okay. Bold.
It definitely encapsulates the overall argument presented in the source.
So just to quickly recap then, based on this Finger Lakes One article and the supporting points, the case for Bitcoin overtaking gold seems to rest on its unique digital advantages. That hard-capped scarcity being super easy to move globally, big money finally getting involved, and frankly, its recent explosive growth compared to gold.
That sums it up well. But it's crucial, as the article also implied, to remember the other side. Gold's stability, its long history as a hedge, those are still very relevant points.
Yeah.
And Bitcoin's volatility is undeniable.
Absolutely. It's not a one-size-fits-all answer. It depends entirely on your own situation, your tolerance for risk, what you're trying to achieve with your investments.
Yeah.
So maybe a final thought to leave everyone with. As everything becomes more digital, are we going to see this kind of reevaluation happen with other traditionally physical assets, things we've always thought of as tangible stores of value?
That's a really interesting question. What else might face its own Bitcoin moment, so to speak?
Exactly. Definitely something to ponder. Okay, thanks for digging into this with me today.
My pleasure. Always interesting stuff.
And thanks to all of you for joining us on the deep dive.